Hey YouTube, this is Zach with Achilles Financial. Today we're going to be talking about Genius Sports Ltd, which trades on the New York Stock Exchange under the ticker symbol GENI or GENI. The reason why I want to talk about them is because this is one that we've been following since they were a SPAC trading under the ticker symbol DMYD. And today they had the confirmation on some news that we had heard a while ago. That caused the stock to jump up not only 6% during the regular trading hours, but they're now up another 4% after hours. To showcase kind of what that looks like on the daily chart, what we'll look at for today is at the beginning of the day, they did have an announcement. There was a short report that came out against them from Sprucepoint Capital, and we'll be talking about some of their feedback there. But you can see that is when they kind of fell down and they recovered quite strongly. This is a good one. This is one that I do have in my portfolio and we've been talking about for quite some time. I'm glad to see it over $17 a share because this is a stock that we have been trading pretty heavily. Generally speaking, we've been selling it north of $20 a share and buying it south of $17 a share. And I've been talking about that not only on Twitter, where you can follow me at Finance Achilles, as well as in the Discord, which is in the description down below. You can see that over the past few months, we've been on that steady downtrend, despite the fact that they actually had very strong earnings. Now, some of this I think is because, again, the sector as a whole, some of the betting stocks did trade lower with Penn National Gaming as well as DraftKings dropping fairly heavily. But you can see on the year-to-date basis, the company has traded basically flat as of this point in time. With the after-hours movement here to 17.45, we are going to be trading a little bit north of break-even for the year, which is good. Again, I think some of this volatility on a stock like this allows for great opportunities to enter and to exit. At this point in time, I do have a covered call that is expiring on August 15th for the $20 slot or strike price. So if the stock is over $20 a share at that point in time, I will be selling those shares. I have no intention of selling the covered calls right now because while I do like this as a long-term investment, I do sell covered calls, which is an option strategy on the stock when we have these big up days. So I have thought about potentially rolling it, although that's really just to capitalize on the higher premium right now because the premium I currently possess has deteriorated so much or decayed. Again, it's going to expire next Friday. So what we're going to look at here, though, is not only is the news that Genius Sports is partnering with DraftKings to enable full NFL betting. Is that going to affect the stock? Clearly, the market seems to be taking that positively, but also some of the points that Sprucepoint Capital have outlined, how are they going to affect the stock overall? So one of the things that I would highlight, if you look at the earnings associated with the company, they've actually been doing negative net income. Now, if we highlight some of the follow through here when we talk about the total revenue, I do want to highlight a lot of the information that's going to be coming through here is not necessarily from Genius Sports, but some of the DMYD information. And because this is now a new combined or net new entity, the company is making money and they seem to be growing very rapidly. So it's kind of odd to see, again, when we're calculating this, how they're only losing $316,000 a share. That's largely, again, this company is based in the UK, so their reporting standards are going to be a little bit different. However, they still have to comply with GAAP. So I'd like to see that information coming through. For that reason, you're not necessarily going to see very strong items associated with what we have here on the screen because a lot of that is going to be coming from DMYD. So what does this bode for the company? Again, right now we're trading at $17.50. The expectation is that the stock has been historically, it's actually crested over that $20 point twice. Whenever it does, we have sold. So what am I going to be looking for? Well, let's go and review some of the feedback from Sprucepoint because I do agree with a lot of what they're saying. However, I still think that the stock has a lot of opportunity. So now that I'm on Twitter, again, feel free to follow me at Finance Achilles and join the collection there. I tweet trade ideas as well as interact with a number of personalities on Twitter. So there's a lot of capabilities there. One of the items that I want to focus on is, again, Sprucepoint Capital issuing a strong sell. So this is not the reaction you want when you get a sell report, especially if you are shorting the company and the company stock goes up 10% over the course of the day, even if some of that is after hours. So some of the things that they were highlighting is some of the pros they expected from the DraftKings relationship. I think that those are pros, despite what they're saying here. I do think that it's expensive, but it still has the opportunity to utilize that information going forward. And I still think that it will be a profitable relationship, despite the fact that they did pay a lot of money for that. Some of the positive catalysts that they are highlighting here is, again, I do agree, the SPAC merger is completed, as well as sports betting. Now, keep in mind that right now in the United States, there are only a few states that have online betting allowed. My expectation, and something that they don't talk about in this grouping right here, is the fact that we have a significant amount of the stock price is already inclusive of the data is in here. And the more states that is going to be including the capability to do online betting further emphasizes this relationship. So there's a lot of capabilities here. Now, one of the things that I would highlight is they just showcase what the company actually does. And as we go through this, it talks about a lot of what's coming straight from their share deck. For that reason, there's no new information that is coming through here. It's really just the opinions of this particular institution, Sprucepoint Capital, saying this is why we think it's overvalued. Now, I think that there's a difference between a overvalued company and a company that is fraudulent or is misleading investors. I do not think that Genius Sports is misleading investors, and clearly the market would agree with me. And I haven't seen anything thus far about the expectation that they are going to be having a Department of Justice going to be looking into them, or the expectation that we are going to see any action from the SEC associated with it. Again, not super familiar with Sprucepoint Capital Management personally, but there is a lot of information that they're coming around here that I agree with a lot of what they're talking about in terms of the overvalued nature of the stock. That being said, the company is still doing very well. They're still growing more than 20% CAGR, compound annual growth rate. For that reason, there is a lot of capabilities that make this very attractive going forward. So despite the fact that they have a number of negatives associated with the company, I don't think that we're going to see a future state associated with the stock in which it has the pullback from the 60% decrease from where it was at, which would have been right at $15, $16 a share. So what does that mean for the stock price between the two items coming out today? And to provide my opinion, I'm going to highlight kind of what we have here on the screen again, the stock price. My target entry and exit is I am currently entering most of the time when it's under $17 a share. So last time we picked it up, it was right about here. I am then selling those covered calls. I try and target these big green days and I roll those calls. So we may see what I do tomorrow. But the expectation is right now just continue selling those covered calls. I do like to sell between the $20 and $22 a share range. Whenever I'm doing this, it will be in the Discord, which is in the description down below. But that's the range that I'm targeting because the company is growing incredibly rapidly. There's a lot to like about it, but they're still trading at a very, very high valuation in a market that has a lot of struggles in and of itself. And so for that reason, I don't see GENI right now this calendar year going to $40 a share. As such, when I missed out because I sold right around earnings last time and the stock went up over $24 a share, I didn't feel like I missed an opportunity because I knew that it was a short-lived rally. And right now I expect that we'll see more of the same. So that's kind of what I'm watching going forward, and I expect that trend to continue. Now, keep in mind that when we look forward, the company is going to be announcing earnings in another few weeks on September 8th. So that'll be what we'll be expecting to watch, as well as analysts right now have a consensus buy with a price target of 32. Keep in mind there are not a ton of analysts covering the stock right now, but I do think there's significant upside right now. We just need to continue watching it. So thank you for watching the video today. I hope this was beneficial. If it was, please leave a like and subscribe, as it really helps the channel to grow. This is a stock that I enjoyed covering because, as I've previously stated, I've been covering it since they announced their SPAC merger back almost 1 year ago now, 9 months. So this has been a good one. And as such, if you'd like me to continue providing these type of companies, let me know in the comments down below. Thanks. Talk to you all later.